Hello everyone. This is the pre-market report video for today, 16th June 2025 for the Indian stock market in terms of Nifty and Bank Nifty. As most of us know, last Friday, Nifty closed 170 points lower, continuing Thursday's 250 point decline. In just two trading sessions, Nifty erased over 420 points. It all started on Wednesday night when the US requested its embassy employees and their families to leave Iran and Iraq, which itself increased the WTI crude oil price from around 60 US dollars to above 65 US dollars. Then on top of that, on Friday early morning, before our market opening at 6 a.m. Indian Standard Time, Israel escalated their conflict with Iran. As a result, Nifty opened with a gap down of over 400 points. Fortunately, it recovered more than half of the losses, and by the end of the trading session, it was down by only 170 points. 11 out of 13 major sectors closed negative, especially the oil companies BPCL, HPCL and Oil India all were down between 1 to 2%. On the other hand, defense sector stocks supported the market. It increased 1.75%. So, because of the Friday's Middle East escalation, oil price further increased by another 7% and hence both WTI crude and Brent crude oil crossed above 70 US dollars per barrel. Overall, the advanced return ratio was 4:9, meaning for every 4 stocks closed positive, 9 stocks last Friday closed on the negative note. Here, it wasn't just the Indian market that closed in the negative. All the major global market index such as China, UK, Germany, Japan and France all closed on the negative note. If required, please pause and have a look. And the US market followed the same trend. Dow Jones underperformed all. It decreased by 1.79%, while S&P 500 fell by 1.13% and Nasdaq declined by 1.3%. Meanwhile, US VIX spiked significantly like 15% and moved above 20, closer to 21. In addition, dollar index fell below 98 to 97.7, which was 3 years low value, all very negative for the global momentum. Regarding Indian ADR, as it is, all the major ADR closed negative between 0.7 to 2.5%. However, when factoring in arbitrage, both banking stocks and Reliance Industries are showing some relative strength. On the other hand, IT stocks continue to show the negative arbitrage of around 1%. Then about GIFT Nifty, on Saturday morning it closed at 24,743. Hence, equating that with the spot market, it's indicating the flat opening with some negative bias. So, on the face, it looks like the Middle East conflict was over by Friday itself, but it's not. Yesterday was supposed to be the day the nuclear deal was signed between US and Iran. However, due to the escalation involving Israel in Iran, Iran refused to sign the agreement. Hence, at present, both the countries, Israel and Iran, retaliating each other during the same moment as we speak. So, on top of the 7 plus 7% increase in the last two trading session on Thursday and Friday, now Monday morning oil price increased further by over 2%. At the time of this video, WTI crude trading near 73 US dollars per barrel and Brent crude trading just below 76 US dollars per barrel. And for now, US future market trading mild negative. If the escalation further intensified means then market might react more negative. On the other hand, any form of de-escalation will be very positive for the global sentiment. That aside, back to the Indian market. Last Friday for the third session in a row, FII was net sellers. They net sold for 1,250 crore rupees and DAI again supported the market. They net bought for 3,050 crore rupees. Then on the derivative market, last Friday, 20% new call options and 15% new put option open interest were added. Surprisingly, retail traders sold more call options and bought more put options. Here, they bought those put options from FII and they sold the call options to proprietary traders. So, in one trading session, retail traders from holding net 3.3% open interest in volatility adjusted bullish position at Thursday's close to a net 1.6% open interest in volatility adjusted bearish position. On the other hand, proprietary traders turned bullish. They currently hold net 2.7% open interest in the volatility adjusted bullish position. As for FIIs, they remain largely neutral between bullish and bearish positions, though with a slight negative bias. As a summary, global momentum is not good. US future market, Indian ADR, and GIFT Nifty all indicating marginal negative opening. Will it recover? All in the hands of Iran and Israel. But one thing for sure, this increase of escalation and the high oil price is huge negative for Indian energy stocks, especially for the oil marketing companies, as higher oil price will decrease the profit margin. However, by chance, if both Iran and Israel agree to de-escalate means, then it could trigger massive profit booking among oil traders. To some extent, the same applicable for gold and base metals because of the conflict which have all surged, and even aluminum has seen a sharp price increase. Despite all these, in the derivative market, proprietary traders seems positive, which offers a bit of a comfort. Moving on from the stock wise, Hatco, IOC, Hero Motocorp, Mastock Shipping, Fortis, NMDC, Hindustan Zinc are some of the 99 stocks that got an increase in open interest along with a decrease in price, indicating the short build up. On the other hand, Manapuram Finance, Oracle Finserv, Muthoot Finance, Jubilant Foods, ONGC, and BEL are some of the 22 stocks that got an increase in open interest as well as increase in the price. Hence, these stocks indicating the long build up. Just for info, this coming Wednesday night before our Thursday's weekly expiry, US Fed will announce its interest rate decision. But that's not all. This time, Fed chairman and his team are also expected to share their projections for future interest rates like 1 year, 2 year, and 5 year from today. As a result, we can expect the market to factor in these projections, which could significantly influence price action this week. Regarding the things to look out, before our market opening, several China economy related macro such as unemployment rate, retail sales, and industrial production growth rate are due. And during our market time, India's wholesale inflation and Europe's wage data are scheduled release. Then later in the night, the US 20-year bond auction are some of the things we need to keep an eye out today. Coming to technical, as we discussed earlier, last Friday Nifty opened around 400 points gap down but recovered more than half of the losses and managed to close above 24,700 mark. Thus on the daily chart, Nifty formed a bullish candle with minor upper shadow. However, there is still an unfilled gap of around 180 points between 24,700 to 24,900 mark, which is not good, and it continued lower high lower low formation for second session in a row. Furthermore, Nifty traded below short-term moving averages 10 and 20-day exponential moving average as well as the midline of the Bollinger Band with both RSI and MACD maintaining its negative crossover, all indicating weakness. Hence, going forward, the recovery could gain power if Nifty sustains above 24,900 level. Then on the upside, it might move towards 25,100 in the short term. Conversely, a decisive fall below 24,700 could trigger renewed negativity. In case of Bank Nifty, similar to Nifty, it also opened near 1000 points gap down but managed to close above 55,500 mark. Thus, on the daily chart, Bank Nifty also formed a bullish candle. However, more negative than Nifty, it continued lower low formation for the fourth consecutive session and also traded below short-term moving averages and the midline of the Bollinger Band. RSI and MACD maintained the negative crossovers, signaling continued weakness in Bank Nifty. A drop below 55,000 mark could intensify the selling. Then, as per the weekly options data, the maximum call option openers was at 25,000 strike, followed by 25,500 and 25,200, with maximum new call option rating at 25,000 strike, and then 24,700 and 24,800. Whereas on the put side, the maximum openers was at 24,000 strike, followed by 24,500 and 24,700, with maximum new put option rating at 23,800 strike and then 24,500 and 24,600. Thus, from options data, Nifty's key resistance is at 25,000 level with key support at 24,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I am doing this for me and viewers educational purpose only. Thanks for watching.